Welcome to the Best of U.S. Investors 2Regular Guys show. This is Mark and I'm Trent, and today we're going to talk about the election because today is November 5th, Election Day. And we're going to talk about market performance after elections. We're also going to get into a handful of other little things, but right now we're going to really focus on what this election does to markets, and historically what path do we see typically 2 months, 3 months, 4 months after an election. So let's get going.
So how's it
Hey
going? Did you go
Mark,
vote? Did you go vote?
I went and voted. What is today? Tuesday. I voted on
Today's
Thursday. Yep.
oh,
Yeah.
yep.
Went
It took
in.
and
Easy
smooth.
process, smooth
Good.
sailing. Couple things on our ballot in Florida that were new and interesting, and I'm curious if they'll pass. Um, and Yeah, so anyhow, it was easy, and the process was simple. Identify, I had to have a driver's license. Had I, prove that I live in the county and I live in Florida and who I am, and yeah, it was really easy. No hassle, no fuss.
Oh, good.
Everything was really simple. Yeah,
So you went in and you identified yourself as Julio Iglesias and got your ballot, right?
exactly. Neil Diamond. I'm Neil Diamond.
Yep. I
No.
I live in the country, so I had to mail me my ballot, and I got to mail it back. They have a system where you put your driver's license number, and before they mail you a ballot, they send you a card, and you have a signature card, and then you have to sign the outside of the envelope of the ballot and mail it back. So I actually took it back down to the to the office for elections, and it was 2 weeks ago. That was the first day of pre-voting or whatever they call it, advanced voting, and there was a huge line out the door. So it
Wow.
looks like people are taking the election seriously, and that's good. We need to, and we get a lot. This is an investment channel, so we get a lot of people. I noticed lately in the last couple of weeks we're talking to, and they're talking about, oh my gosh, should I sell out all my stuff because so and so is going to win or so and so is going to lose, or I'm so worried about my portfolio. So I thought I would kind of look into the history of past presidential elections and what
Sure.
happens, and go through that, and maybe give some people some ideas of what we've seen in the past. Not that past activities are going to predict the future, but give you a little bit of history of what's happened in the past. So I went
Yeah,
and found a couple. Go ahead.
I think it's a good idea because I think most people think, um, Mark, they don't really know what happens, a
Right,
couple months afterwards.
right,
And it's surprising, actually. And it really isn't biased in any one direction. So
right. Yeah.
not to
So
spoil or anything.
I found some information. According to Reuters, investors right now are trying to gauge how stock markets will react. There's polls and betting platforms, which is weird. Those betting platforms now, that's just really strange to me that we're betting on that. But anyway, I digress. They point to a tight race between Harris and Trump. Okay, some 57% of investors, this is according to Reuters, say they're anxious about the race. According to this is from Betterment. Sorry. According to a recent survey from Betterment, and roughly 40% say they plan to move or pull investments from the market based on which candidate wins. So you get this, and we've had this question too, you know, and
Yeah.
and so I wanted to go and just kind of historically kind of calm everyone down a little bit, uh, and uh, and just show what happens and how the markets really act. So historically, when you take your ball and go home, when your candidate falls short, that's been a losing strategy. Okay, so uh, research published earlier this year from Carson Research Group, which tracked the performance of the S&P under every presidency since 1953, showed the following. Had you started investing with $1,000 in the broad U.S. stock market that year and only kept your money invested during Republican presidencies, okay, this is from 1953, and pulling out under Democrats, you'd have just under $30,000 today. The research found If you follow the same strategy but only invested with Democrats, you'd have about $60,000. Okay, that's your.
Interesting.
However, okay, and back to 1953, if you had stayed invested during that entire time frame, you would have $1.7 million. And the reason is the S&P has gone up 17 in the last 24-year administrations. Okay, so
Wow.
it really didn't matter, according to the Carson Group. So he said if you got out of the market because you didn't like the person who was in office, you gave up some really great gains, and that was Ryan Dietrich. He's the chief market strategist at the Carson Group. So they went on with Reuters, and Reuters kind of gave up an idea of, if based on who won, what sectors might have an advantage, okay, or where would we put our money? And again, these are just speculations, okay, and this is from a Reuters story. So I thought it was kind of interesting. They took out what if Trump won, what if Kamala Harris won, where would the money flow? So for Trump, they said banks. Okay, this is from Reuters. A Trump win or Republican sweep could lift Wall Street banks such as J.P. Morgan Chase, Bank of America, and Wells Fargo on improved domestic investment, looser regulations, domestic job additions, and tax cuts. That's what Bank of America analysts said. M&A beneficiaries, merger and acquisitions, include Goldman Sachs, Morgan Stanley, Lazard, and Evercore, amid a more lenient approach to antitrust regulation enforcement. They also said, besides banks, crypto would benefit. A more receptive regulatory approach to digital assets under a Trump win could benefit crypto stocks, according to TD Cowen, an analyst who highlighted the likelihood of the former president naming a pro-crypto SEC chair. Right now we have Gensler in the crypto world hates him right now, and he doesn't really like
Mhm.
crypto. So during the campaign, I think RFK and Trump both went to the National Bitcoin Conference. I think it was in Nashville this year, and gave
Yeah.
speeches, and Harris did not. And then she kind of came up later and thought, well, maybe it's a good idea if I support these people too, because they're pretty powerful. But you can look at the past history over the last 4 years. They weren't really supportive of crypto, so we'll see what
Yeah.
happens. Trump has Elon Musk, who loves crypto, on his side. And if you look at what Elon's trying to do, and you look at uh, Trump saying that we want to be the Bitcoin capital or the crypto capital of the world, that really fires up crypto. So you're already seeing that in the markets right now. Crypto has gone up. It was kind of stuck between 52 and 62, and now we're up today on election day. I think we're above 70 or around 70 right now.
Yeah.
So
70,
um,
yeah, 70,219.
So it looks like crypto industry, or the crypto, uh, you know, market is looking that maybe Trump might win at this point. And again, we're on election day, and no polls have been closed. We don't even have any results on anything. The
Yeah.
other thing, and this shouldn't surprise anything, is energy. Morgan Stanley analysts believe that a Trump presidency could prioritize reducing the regulatory burden on domestic oil and gas production while considering the possibility of more restricted trade policies. So he's always said that, drill baby drill. So you would expect energy companies to benefit. So Trump's support for the fossil fuel industries could benefit oil and gas stocks, as he'd like to pursue policies that favor domestic energy production, said Daniela Hawthorne, senior market analyst at capital.com. Trump could leverage authority to rapidly increase production levels, which would benefit exploration companies such as Chevron, ExxonMobil, and ConocoPhillips. He could also reverse the Biden administration's pause on permitting new LNG, liquid natural gas, export projects, likely benefiting Baker Hughes and Chart Industries. However, Trump's proposed 60% tariffs on imports from China could hit LNG exporters like Cheniere Energy and New Fortress Energy in the case of any retaliatory actions. So again, one of Trump's big plans is, if you are going to put high tariffs on us, we're going to put high tariffs back on you. If you're a company that's going to move your production to Mexico and make cars and send them back to us and not use American workers, we're going to put a 300, 4% tariff on that car. Okay. Now, do I think he's going to do that? Yeah, I think he might, but I think it's more of a tactic for him just to warn people, don't do it, and we'll see.
Yeah.
We'll
It's a
see how that
deterrent.
works. Yeah, deterrent, exactly. And that's why he did it. And luckily, we've had 4 years to see what he's done. And that's pretty much what he did in the prior 4 years of this administration. Other
Hmm.
stocks you might want to look at, according to this Reuters article, are Trump-related stocks. And Trump Media and Technology Group, which is D, DJT, Donald J. Trump, in which Trump owns a majority stake, software firm Funware and video sharing platform Rumble stand to gain further if he wins. Both Funware and Trump Media and Technology have doubled in October after sluggish performance in recent months. And I have to say, I've been in and out of Trump stock twice. I got in last week and got out, and the charts didn't look good. But this is one of those trades where the momentum and what's happening in the broader market kind of trump the charts. And I don't mean to say that in it,
Yeah.
trying to be funny, but the emotions there. And so I got back into it the other day, and it's up again 15% today. So,
Yeah.
if Trump doesn't do well, I mean, it's election day, so I got to make a decision here. If he doesn't
Yeah.
do well, I'm up a lot. If he doesn't do well, it's gonna tank. Uh,
Yeah. And
but if
and
he
honestly,
does,
that's go ahead.
no, what were you gonna say?
Honestly, that decision to buy that stock had to be backed with a process,
Right,
right? And a
right,
decision, so you don't get emotional about it, you
right.
know?
But
Because
I'd
I
have
think
to
if you
say,
remember right, you stopped out of it last week
I
because
did.
it pulled back.
Right.
Yeah.
And so I looked at it again, and it dropped after I stopped out. And
Yeah.
then, after the weekend came up, and it looked like the polls were turning in favor of Harris. And then, so it dumped right away on Monday, yesterday.
Yeah.
And then I was watching it. I just put in a really low limit order, and it triggered it. I think it was at 29 and change. And I think now it's up, what's it at? 40, 39.
Uh, 39.60. Yep.
Okay. So that's a nice little pop at 10 points. So I'm
Yeah.
happy with that. But when we're done with this video, I got to make up my mind. Maybe I'll sell half, or maybe I don't know. But I don't like
Yeah.
giving up gains, but we'll see. So anyway,
Yeah.
so I'm actually living that Trump trade. Okay. And it's based nothing on the technicals, because the technicals don't look that good. And it's based nothing on the fundamentals, because that company doesn't make any money. It's all based on the emotion that I see in this election and how many people are so fired up about it. If there
Yeah.
was a Kamala Harris technology company, I'd be doing the same thing. Okay.
Yeah.
Just
It's a
because,
trade.
yeah, it's a trade, and it's based on just years of experience of watching these elections and going, okay, I'm going to be in and out. I'm going to see if I can pop it. It's a total gamble. Right now, it's working out. Another industry that was interesting to me that they brought up were prison operators. So companies like Geo Group and Core Civic may benefit from Trump's reelection on promises of a crackdown on illegal immigration and restrictions on legal immigration, which could boost demand for detention centers. Never thought about
Mm.
that. Carriers. Wells Fargo analysts said the proposed tariff on Chinese imports under a Trump term could hurt demand for parcel carriers, FedEx, United Parcel Service, forwarder C.H. Robinson Worldwide, which have substantial exposure to China. So there you can see where it might hurt somebody
Yeah.
if tariffs are in place. And the other one is small cap stocks. Okay, U.S. focused companies could benefit from business incentives and tariffs that favor domestic production. So he's saying, these guys are not going to get hit by tariffs. These small companies, in fact, they're going to start producing more, because that's what they want to do, is produce more here. The
Right.
small cap Russell 2000 index has risen nearly 9% so far in 2024. So that's what they're saying. If Trump wins, that's what that's where they think the money will go, or that's who they think it's going to hurt. Now, if Harris wins, then the Harris basket, they started out in home builders. Home builders would benefit. Harris pledged to build more homes and reduce costs for renters and home buyers, largely through tax incentives. I think, what was it, $50,000 or whatever that she was going to put
25.
in?
Yeah.
25. Okay.
25. Yeah.
Couple with a benign interest rate environment could boost home builders D.R. Horton, KB Home, Lennar, Pulte Group, Zillow Group, and Toll Brothers. The second industry that they think if Harris got in would be benefited was healthcare. So this sector has always been a key focus for the Harris campaign. She has pledged to cut healthcare costs by implementing caps on prescription drug prices, such as limiting insulin prices to $35. This could weigh on profit margins for pharmaceutical giants such as Eli Lilly, Merck, and Pfizer. So that may hurt the profitability of those companies. Andrew Wells, the CIO of Sanjak Alpha, however, expects healthcare issuers uh, such as Humana and United Healthcare Group to likely benefit from expanding coverage under a Harris presidency. Healthcare for all kind of a
Right.
situation. Corporate taxes. Harris' proposal to tax corporations and the wealthy includes a 28% corporate tax rate. Okay. According to stock analysis, Microsoft, Apple, and Alphabet were the three firms shouldering the highest income taxes over the past 12 months, collectively amounting to 67.73 billion. So just remember when we tax corporations, that's going to come out of their profits. That's going to come out of their money that they reinvest, going to come out of the money that they pay people. And eventually, people like you and I are going to pay for it because they're going to pass it on. That's
Right.
just what they
They're
do.
just
They're
going to
not
raise
going
the
to eat.
prices.
Yeah, they're not going to eat that. It's highly unlikely to see a blue wave, but if that happens, the market reaction could be temporarily negative due to the prospects of higher corporate tax rates, says Ceteris Klimke, whoever Klimke is, part of the article. The other one, like we were talking about energy stocks for Trump. Well, on the opposite side, if Harris got in, renewable stocks, green energy is poised to thrive under Harris, with the potential for increased incentives and supportive policies, as well as regulations on big oil firms. That's according to Capital.com. So major U.S. renewable energy firms such as NextEra Energy and hydrogen producers, including Plug Power and Bloom Energy, could benefit. So that's what I got according to Reuters, what they put together, their little mirage of where they think money's going to go. What do you think of that? Do you have any others that they didn't think of?
No, I think, if Trump gets in, really, okay, so Mark, let's step back a little second.
Okay.
We both know markets are driven by liquidity. So liquidity comes from inexpensive money, right? And if you have inexpensive money, people can borrow, corporations can borrow, they can invest and grow their businesses. I look at this and I go, okay, right now liquidity is tight with interest rates where they're at. The Fed funds rate is at where it's at. Now they have, forward guidance has been we're going to reduce by another 25 basis points like next week, I think is their meeting.
No, that's this week. That's tomorrow.
Oh, it's tomorrow. Oh,
Yeah.
wow. Double doozy this week.
Well, yeah,
Um,
we'll get the Fed press conference will be Thursday. So yeah, we got double everything this week. This could be a fun
yeah.
week.
Oh, yeah. So if they lower rates, that means money gets cheaper. And depending on who gets in office, Trump, if I remember right, was very in favor of zero rates when he was in office. And his economy did well during his period. And since Biden's been in, we had zero rates for a while, and then we have super, you know, exponential rates on the second half.
Well,
So
due to
my question
inflation.
is,
Yeah,
huh?
due to inflation.
Right.
Yeah.
Right. So my question is more of what is each party or president going to do when it comes to availability of money at a reasonable price? Are we, if Harris gets in, are we going to continue to see a dribble down, a step down each, in Fed funds rates? Or are they going to stop? Is inflation just going to go through the roof? Or if Trump gets in, what is he going to do? What's he going to push for? And if history says both of them actually will push for lower rates. But the problem is, and we've talked about this, is inflation then goes up on both
And,
sides. So I think then it comes down to, do you inflate your way out of this hole? And if so, who's going to be the most aggressive at it? And I would say Trump would be more aggressive on inflating your way out because he'll take away regulation and allow businesses to do business. He'll drill, baby, drill, and those are big parts of this country in that what we produce, we could be self-sufficient when it came to oil.
well,
And
we already
so
were.
we were, and then now we're
Yeah.
not. But if we go back to that, I think energy, um, if rates come down drastically, real estate could be a good one in healthcare. But it really just depends on what each party decides to do or each candidate decides to do. And um, I do think we're way overextended. And so that's got to eventually reset itself. So either way, it's going to be a challenge. But I think when it comes to Trump, it's energy, it's drill baby drill, it's that area, it's technology. If Harris gets in, I think it's the same thing that we've seen for 4 years. Honestly, I don't think
But
anything really changes.
I haven't seen any proposals of change other than what they've done so far.
Yeah,
Um, I think what Trump will do is go back to what he did, 4 years ago with threats of tariffs. Except he's got some new ideas in there with no taxes on tips, no taxes on overtime, no taxes on Social Security. Okay, those are big things. 15% corporate tax if you make all your products here. Okay,
yeah,
that's
that'd be
huge.
big.
Yeah, that
Right.
is huge. Think of the productivity and the amount of money that could be produced in the jobs that could be created. And you know, and right now I think we're on the edge of, we're seeing the jobs report last week, only 12,000 jobs were created. And if you took out the government jobs, private sector jobs were actually down. Okay. So we're
Or
not
think
seeing
about
that
just
part.
think about that. 12,000 jobs
Yeah.
in a country of 300 plus million people.
And 20 million.
That's all
Yeah.
that was created.
Well, and it was mostly part-time
Government
jobs,
jobs.
mostly government jobs.
Yeah.
So, and I think it's what I forget, 14 out of 15, whatever, pretty close. Of these jobs have been revised down every month. Okay. So think about this one. Is this one going to be revised down to a negative number, after the election? You know, I'm
Could
thinking it
be.
will, because that's what history's been telling me here, this year.
Yeah.
So again, if that happens, the Fed can't lower rates. Okay, if we're losing that many jobs, and we're already starting to see, you can go through the manufacturing reports that prices aren't coming down in the producer price index or the CPI, they're going up, the cores. So inflation is not tamed, it's not going down anymore, it's starting to tick up, and we're starting to lose more jobs. And there's your stagflation right there if they don't
Yeah.
stop this.
That's one thing that I think people misunderstand about that increase in inflation, that number you see. It's what at two and a half, 2.9 or something like that.
Mm-hmm.
Um, that's how much it's growing, what, year over year or quarter over quarter,
Month over
right?
month. Yep.
Month over month.
Yep.
That isn't what the long term has been. I mean, cost has gone up 87% or so since 2000. So it's still expensive. It's still rising. It's just
Right.
it's slowing.
Well, that's
You're
why when you
still
go,
doing 120 miles an hour, but you're slowing at a 2% rate of
right. Well,
slowing. You're still doing over 100.
that's why you go to the store and you're not seeing prices go down. You're just seeing them not rise as much. Okay.
Right.
Now, the reason that doesn't work for people is because they're, on average over the last 4 years, 3.5 years, inflation's gone up over all categories around 20%. Now, and then you've got like insurance has gone up 56%. Okay. Anyone's got their house insurance or car insurance. Mortgage has gone up over 100%. Okay. From 4 years ago. And then you just look at medical care and all this, and it's anywhere from 30% to 28%, whatever. We've gone over it in this show before. Okay. Those haven't come down. Okay. But every time you see the report comes out, Steve Leisman runs out there with a gleeful glow saying, look, inflation's under control. We're almost back to the 2%. Well, but we didn't go down. We never took it back down. So until wages come up and can get back to where they were, people are underwater. Okay. That's why you see their credit cards maxed out. They're using their credit cards to buy food, and you're seeing that their cars are being repossessed. Okay. Because they can't make their car payments. And now you're seeing housing, starting to get hit, especially in your area. People can't sell their houses because they're worried about not having a job or they don't have a job. And then the interest rates on mortgages have gone up because the interest rate on the 10-year bond the yield has gone up. Okay.
Right.
How can the yield go up on the 10-year bond if the Fed is lowering rates? Well, they're only lowering the rates that they borrow from each other. Okay, the banks. They're not, and so the bond market itself it says, hey, this ain't working. Okay,
Yeah.
and so the bond market will correct or will correct all of the mistakes of the Fed, and that's what we're seeing right now.
Yeah. Yeah. And I think that's the one thing you need to take a look at or keep an eye on is what is the bond market telling us? I mean, it is the largest market in the entire world. It
Yes,
is very forward telling. And what you're seeing is a lack of confidence in the US Treasury market. And they're going elsewhere. They're going to gold, they're going to Bitcoin, they're going to alternatives. And that 10-year Treasury being attached to your mortgage rate, if it
and your
continues
credit
to go up,
and your credit card rates.
yeah, your housing is not going to get it. Your housing prices are not going to get any better
No,
at all. I mean, it's just not, you're not going to see housing, turn around. It's just not going to
well,
happen.
well, I mean, we're still printing money through the treasuries on all the bonds, the bills and bonds we're putting out at higher rates of interest, even though some of those have come down. Um, but what no one has talked about until recently with the introduction of Elon Musk into the whole political party is cost cutting and efficiency within our spending on the government side. And now he's out there saying, look, I think I can get 2 trillion of savings. His mom was on TV the other day and she's like, I think he's just understating. I think it's 3 trillion, you know. So there's a lot of
Wow.
waste. And you think about it, any of your companies you work for, they have layoffs and you get tight sometimes and, make sure you use that pencil all the way down to the nub and don't throw it away, things, and I don't think the government has had to go through any of that. I don't know of any government layoffs, in the last 4 years where I can
No.
tell, I can rip off, many layoffs, look at Boeing right now, you know, so,
Yeah.
they're even going to lay off even with the strike being over. So anyway, that is the good news, though, because Boeing's finally, their West Coast factory workers did accept a new contract offer yesterday, and that ends a 7-week strike that halted most jet production and deepened the financial crisis at Boeing. The union said members voted only 59% in favor of the new contract, which includes a 38% pay raise spread over 4 years. It's a pretty good deal, you know.
Yeah.
59%. So you're thinking, 41% didn't vote for that, which is interesting. So
Yeah.
at least that's good, but it's going to take a while to get this the supply chain for the aerospace back up and running because this just isn't Boeing. This is all the little companies that have had to lay off and stop production all around the world, for this aerospace company. So we'll see how
Right.
long it takes that to get up and how long what that's going to do as far as going through the economy too. So
Yeah.
there's our good news. Uh,
Well, and that's the thing is like, that Boeing has been on strike for 7 weeks. That's a long time.
right.
It's you're pushing a train now uphill to get the flywheel, to get it moving again. It's, if it takes 7 weeks, what was it they were saying about the dock workers strike for every day is equal
One
to
week, one week, one
a
week of
week,
yeah, yeah. And
once they
remember that strike's not over. It's just like in suspension. That goes to
right,
January
that's
15th. Okay. If they don't
yeah,
get anything solved by then, they're going back out. Um, but we'll see.
yeah. And that's another element that, the next president faces is that you have a dock workers strike, potential strike again. Um, you've got, in my opinion, you've got enormous economic deterioration, and it's been sort of passed over for the last year or so. And I think that's, I'm looking at a U.S. housing starts, in the last 12 months is down 10.33%. Um, to get that going again is going to take a lot of economic engineering, but it's going to take some time. And I think that's either candidate is facing that challenge, and it's a question of how you're going to do it. Um, Going after billionaires and taxing them, what's that going to do? They're smarter than any of us. They got a team of
Yeah.
accountants. They're not going to pay taxes.
No, they don't
You
pay
know,
taxes now. So
Right. What makes you think they're going to do it now? I mean, come on. Um, I do think one thing that is sort of alarming to me is Warren Buffett's selling one of Bank of America. Having dived a little into that, I heard he spoke at one of his meetings encouraging Bank of America to market their bond holdings and because take the hit now kind of thing, and they didn't. And what soon after he started selling out of Bank of America, as well as he's been selling out of Apple and raising well, he's over like 325 billion, I think he has.
yeah, let's talk about Berkshire a little bit because I'm a longtime holder, and that's something I wanted to bring up. And I have some comparisons too to his past. Berkshire just came out with their earnings, okay, and a lot of other fun things that you might want to be interested in.
Yeah.
So Berkshire stock price outperformed the S&P 500 in the third quarter, rising by 13.1% versus a total return of 5.9 from the S&P. Year to date, though, November 1st through November 1st, Berkshire's price was up 26.8%, while the S&P had a total return of 21.5%. As you were saying, Berkshire was a net seller of 34.6 billion in publicly traded stocks in the third quarter, and they only bought 1.5 billion of stocks. Again, selling 34.6 billion. Surprisingly, the majority of the sales were from Berkshire Hathaway's sales of sizable stake in Apple. These continuing sales followed on the heels of liquidating almost 50% of its holding in the second quarter of Apple.
Wow.
Before Berkshire sold some Apple stock in the first quarter, it comprised over 50% of its publicly traded portfolio. After the sales, Berkshire's insurance company investment portfolio is down to 48% publicly traded stocks from 63%, okay, in the first quarter, while cash rose from 28% to 49%. Warren Buffett's Berkshire Hathaway has now amassed a cash pile that reached a record 325 billion dollars for the end of the third quarter. It may suggest that Warren Buffett is worried about the stock market and the economy. So another thing that they did not do this quarter was buy back their own shares.
Yeah.
Okay. Why
I've
didn't they
heard
do
it.
that? Berkshire A shares hit a record in the quarter and outpacing the S&P 500, making it likely that Buffett believed his own stock wasn't sufficiently cheap. So sometimes the smart move is to do nothing. So what's going on here? Let me show you a chart that I pulled up. And what does Warren know? Okay.
Yeah.
This is this is a percent of cash. This is Warren Buffett, okay, going back to 90. And you can see right here before the dot-com debacle,
Uh-huh.
okay, he came up and look, he got up to almost 12% cash, came back in, deployed his cash. What happened here? This started in 2002 and 3, okay?
Yeah.
He started selling off and accumulating cash again to this point right here. And this is about '06, okay, '06, '07. And then what he started doing, he started deploying his cash. Well, what's going on here? The great
Yeah.
financial crisis. So he knew something, or he was just damn lucky on these two. And then we come through and okay, we go to 10. We had a little deal around 15, right before 15. You can see he took his cash down. And
Yeah.
then the great financial crisis, right here, he took it up right in during that time. And here we are today. Okay, look where he was during the great financial crisis. This is where his cash position is.
That's
And it's
insane.
not just him. You know, Bezos has been selling out. The Nvidia
He
guy's
sold.
been selling out. These
Yeah.
guys are selling out. JP Morgan, Jamie Dimon's sold out.
Yeah.
Okay. But he has gone to the more almost 30% cash position. Okay. But look at what happens every time he does that. And this one is as high as I've seen it since going back to 1990.
That's
So
crazy.
if that isn't, you think he's just going to cash because he wants to?
No.
Probably not. I mean, what do they know? And, again, we see this happening all the time before these market corrections that these guys seemingly know. If you go back in history, they get out before it happens. And when they get out, it sucks all the retail people in and they get in at the high and these guys are already out. Okay.
Yeah,
So again, that I don't want to be the naysayer Debbie Downer, but I can read charts. I can see what's happening. I've been watching Berkshire forever, and Warren Buffett lives right down the road from me. And I'm like, he doesn't just do this because he thinks getting 4.5% on Treasury bills, fine.
right. Well, and you think, I mean, honestly, if you just look at charts of the top 10 holdings in the S&P 500, they're all like this. I mean,
Yeah.
they're like his cash position in price.
Yep.
It's skyrocketed vertically. One of our subscribers on the Platinum channel sent me how a Brooklyn Tower, which is one of the tallest towers in Brooklyn, actually the highest basketball court in the Western Hemisphere is in this building,
Really.
um, was went into foreclosure. And so I think we've talked about commercial real estate for a while about the pressure of that being, second quarter, there was close to $1 trillion that was needing to be refinanced. It's building. And you look at Buffett's reaction to Bank of America, which he's held for a long time, from what I understand, he sold out. He's selling out of it, if not 100% out of it, and he's looking at this going, hey, technology, Apple, that was a big chunk of his overall portfolio. He's taken that down a big chunk. And now his cash position is super high. He looks at things from a logical standpoint and says, this doesn't add up to this. I don't understand, so I'm getting out. And I think
Well,
he's right.
I think he does understand when he's looking at Bank of America. He's looking at Bank of America and he's looking at the amount of reserves they have sitting over here to cover all the delinquencies, not only commercial, but credit cards and everything that's happening. He's looking ahead, he's looking forward and making inferences. And that's what we're doing by looking at when he goes to cash. Okay, why did he go to cash? Or it's not just, like you said, he's not just doing it for the fun of it. Something
No,
is
because
clicking
it,
this off. Okay.
yeah,
And that's why when the crap hits the fan, everyone has to come to him because he has the money. Okay.
yeah. And that's how, if you think about how did he made a ton on what, 5 billion to Goldman Sachs in warrants. And basically he got in return warrants, which is a way to they pay you back and you in stock, and he convert at the price or a predetermined price, he converts it to stock and he sells it.
Yep.
Yeah, yeah. And he made
Plus
a
he gets
ton of
interest.
money on
Plus,
that.
plus he gets interest on the warrants at six
Yeah.
or 7%. Yeah.
I mean, he made out like a bandit. And if you look at that chart you just posted, he knew he was going to become the bank. And you make the comment a while back about the number of jets flying into
Yeah.
Omaha to
Right.
go meet with him. I suspect this is going to be a lot of jets with maybe country flags on them.
Maybe.
Um, and, that kind of thing. I think, he's not, like you said, I mean, yeah, he may be making 4.5% in treasuries, but he can make money elsewhere. He make a ton of money, and I think that's what he's doing right now.
Oh yeah. I mean,
Um,
his dividends off Coca-Cola and American Express are more than most companies make, in earnings,
yeah,
so it's it. So I'm just looking for trends and putting the pieces together for us and what we talk about here. But again, these are signs. Take them as you wish. This isn't financial advice, but I look at it going, okay, why are these guys doing that? And I look and see why are they doing it. And with Apple, maybe he sees, okay, Apple's hit its top, and we're starting to see competition from China and Huawei. We're starting to see sales revenues. Well, Apple, I'm not a big follower of Apple, but I think they've been flat quarter over quarter or down for several quarters now.
they have a
Maybe he's
declining.
looking at that.
Yeah, I mean, you can, and honestly, if you look at all of these technology companies and you look at their rate of change, quarter year over year, they have all been declining for the last 3 months. Apple is one of those. And so if your revenue is declining, that means people aren't buying your product, or your service. Apple, is facing a challenge of where do they fit into this whole AI technology phase right now. I honestly think it's healthcare in some way or another, but it's not as sexy as artificial intelligence and large language learning, that kind of thing. But these companies they're seeing a slowing in revenue. And I think honestly, Warren Buffett just sits down with his, 8 by 11 and, 11 pad of paper and does the math and goes, this doesn't add up. So, and they're in the management or the heads of these companies are not taking that approach or even listening to him. And so he's like, okay, well, I'm just going to go to the sidelines and I'll come back and buy you up when you're cheap, you
Yeah,
know?
and that's been his philosophy forever. And like I said, I've been an investor for a long time in
Yeah.
Berkshire, and this is why he's very, very patient.
Yeah.
So,
His Historically though, if you go back to 2000, 2 months after the election, after the election for the next 2 months, the market's gone up. Yeah, in this case, the S&P 500, except for once, and that was during 2008. And we all understand why that was. So, with all of this said, and understand, and also take into account, Warren started raising cash in 03, I think it was.
yeah,
So he was ahead of the game. But you look at where he is in comparison to '08, he's been doing this for a while.
yeah,
So, in my thinking is, and this is where the question of should I get out of this market before the end of the day because of the election. The thing is there is a chance, the probability based on past history, this market will rise. The question is on average, after 2 months, what happens then? Do we see a decline? Because in 2 months, we have a new president, right? They get sworn in, they put in
well,
policy, what have you.
and
So I'm really curious.
I think you need to look at where we are economically from a macro situation. We talk about it every week. The reports aren't good. Okay, and
No,
the stock market goes up, but the stock market is not the economy.
right.
It's more emotional, and so I'm just looking for signs of if Warren's taking his money out, if Bezos taking his money out, if these guys are taking their money out, why? Okay, and
Yeah,
go back and take a look at what happened before the last crisis, and
right.
start to connect those dots. And I'm not saying you should get out of the markets. It's up to you personally. I just think you always need to have a plan to protect yourself, a risk plan, and manage your risk. Okay, because
Yeah.
I don't know what everyone's situation is, but can you handle a market that dumps 50% and you don't get back to even for 12 years, 10 years, 5 years? You know,
Yeah.
I don't want to do that.
No,
Obviously, Buffett doesn't want to do that.
no. I mean, if you simply look at a chart, a monthly chart of the S&P 500, here, I'll share this with you. Um, can you see this?
Yep.
If you look at this move from October 3rd of 22 to where we are at today is a sizable move. That
Right.
is a really vertical move. If you look at it from here, April of 20 to the peak in December of 21, you saw a pullback. These moves eventually run out of steam and they pull back eventually. And I think that's something you look at here. Last month was a negative. It closed down for the month, roughly 1%. But if we don't see a continuation move higher, then the chances are this is running out of steam. And when I see, the move of how far away from the 200, which is in red, to where it is today, if you look at the yellow line, there is I use the 60 in this case 60-month moving average, it's so far out on the standard deviation element using the 60. There's a good, most likely it will retrace. And I think just logically, you just got to look at this and go, yeah, I can see why Warren is taking some cash off the table. He's made a lot of money over the years. Um, there's a lot of economic data that people have successfully ignored because of our mainstream media. And I'm going to take I need to protect that. And also Warren looks at it and says, I run a fund or a stock, a company that is designed and promise in his main objective is to make money. So he's made money, he's sitting on the sidelines, and he's waiting for an opportunity to make even more money. And he'll
Well,
capitalize just as he
and
did in the
he's
past.
and he's in the real economy. I mean, they own companies outright. They own Burlington Northern outright. Okay, they own home building Clayton Homes outright. They own See's
Yeah.
Candy outright. They own a lot
Roth
of stuff. They own
shoes.
Fruit of the Loom. They own Justin Roper. Okay, they own
Yeah.
a ton of stuff outright. Okay, so they see what the economy is. They own energy companies, Mid American Energy. Okay, they see what's going on. They can see it in every company they have.
Yeah.
So it's not like he's just doing it because he feels like it. He's not.
No. No. He's a smart guy. And he's got a lot of smart people around him. And he applies his logic hat, you know. Unfortunately, most people don't apply their logic hat, you
Well,
know.
it's emotion, and he's not emotional. He says basically what do you say? He says we only swing at the winners.
Yeah,
The ones
right.
that are in the strike zone. We don't swing at the balls and strike the balls. So
He's
yeah.
also he's also one to not to diversify. He's very concentrated. And he has said that, diversification is to the average. He doesn't do that. I mean, his Apple position was gigantic, you
But
know.
but but I think that wasn't his idea. That was Abel's and his other lieutenants who did that. But you think about it, he's not diversified. But if he says if you're not smart enough to do this, put your money in an S&P 500 index and let that
Sure.
go. Yep.
Yeah. And I think for the average person, that's what it is.
Yep.
But when a legend speaks, you got to pay attention, you know.
Well, and a lot of people think he's buy and hold. He's not buy and hold. You can see he's not buy and hold. Okay.
Yeah.
They got into Paramount, I believe, and they got out of that because that was a loser, you know.
Yeah.
And he even said it in one of his meetings, this is this this is not what the one I really wanted to get into. So he must have been somebody else talking to him about that one. But I think they're out now. But
Yeah.
they do. He gets out. Okay, he don't sit there and take the losses very long, if at any. And I don't think he's taking losses on Apple. He's certainly not. Um, and he's probably not taking losses on Bank of America right now either. But he wants to get out before he might have to. I'm sure.
Yeah. Yeah. So I don't know. I think this is a just, looking a month, 2 months down the road, what are the headwinds? Economically, we have headwinds. Housing starts are dropping, have been dropping. The cost to borrow money, headwind. You at Treasury market, yields are going up, causes all the expenses of our credit cards or mortgage rates go up. Um, what are the,
Inflation,
inflation, things start to
still there.
inflate,
And
you know,
unemployment. If unemployment keeps going up, which is interesting that 12,000 new jobs and unemployment stays at 4.1%. I mean, I it's hard for me to believe these reports anymore. It really is. I've tried, but it's hard.
I don't I think it's just it's I if I've learned anything in the last 12 months, it's believe half of what you hear. Look at the facts, look at the numbers. And what I see number wise is the rate of change of revenue and earnings per share growth quarter over year is declining. And especially in those top 10 companies, the S&P 500 holds, the Qs, the Nasdaq 100 holds. That tells me we are not purchasing at the rate we are purchasing, which means at some point there's going to be a report from any of these companies that is really dismal, and they're going to guide really dismally. And we're not used to that. And I think that's a trigger. Commercial real estate. I do think you're starting to see big commercial real estate properties getting foreclosed on. It's just not being publicized because it's bad news, you
Yeah.
know. And you're in a year where you have to have happy, happy, joy, joy to get reelected.
And it's not just
So
us. I mean, look, China's been in trouble real estate wise and consumer wise now. And now you're seeing Germany. Look at Volkswagen. Volkswagen's just laying off. And I mean, that's going to be a huge mess,
yeah,
unemployment wise, and over there. And now you're starting to see their suppliers are laying off over in Europe for the car industry. So it's not just us, it's everywhere, you know.
yeah. I mean, I'm getting notifications from CarMax on cars that I've hearted, liked, saying, "Hey, the prices dropped $1,000," and I'm starting to get them every other day.
Yeah.
When I used to only get it once a week or once a month, now I'm getting every other day. And it's
Yeah.
like these guys are desperate to sell product.
It's the same, you know, you look at your emails. I'm starting to get discounts on airlines. Hey, fly down to Florida, $29 now, you know, and when I
Wow.
went down there in July, it was 200 and some dollars, you know. So again,
Well,
this isn't the hot time to be down there at this point, but still it's
yeah,
pretty discounted.
it is. So I don't know. I think at this point, we'll see what happens. Hopefully later tonight, we'll have a better idea who will be the leader of the free world. We'll have a better idea of what policy. Well, depending on which way it goes, what's going to happen. One way we know we have a sort of a clear idea of what policies will be put in place. The other side, I really have no idea. I think it's just a lot of the same. So I don't know, but in the meantime, protect your wealth and think logically. Does this make sense? And if it doesn't make sense, like Warren Buffett says, if I don't understand it, I don't buy it. Simple. So,
Well,
Mark, you
as
got
I,
anything last words?
as I always say, when in doubt, sit it out.
Yeah. Yeah. There you go.
So, I mean, on
Right
swing
on.
trades, we've been really slow on swing trades the last 3 weeks, just waiting for this election. And it's not because I don't want to; it's because the market hasn't presented me with any swing trades that would match my trading guidelines. You know, so you
And
stay
on
out.
it.
Why risk your capital?
Right. And I think that's one thing. If y'all are not familiar with the Platinum Swing Trading Program, we have a documented paper trade uh, swing trading spreadsheet that Mark has every Monday. He issues new ideas on swing trades. He's averaged per trade over just over 2% per trade. It's pretty substantial. You can check it out. Kerry just did a video on it here recently. You can go to our Best of US Investors YouTube page and watch that video and learn a little bit more. But also, we're running another 14-day free trial for Platinum. You can subscribe, try it out for 14 days. We have the Discord. Mark gets in there every day and he comments every day on new ideas and the charts of interest, and is very active along with myself. And so it is a great program. It teaches you how to trade and invest in this market. And so I would encourage you to go to Best of US Investors, check out the link below for the 14-day trial and give it a try and learn about what we're doing. At the end of the day, we want to help you create wealth and protect your wealth. And the first step is having a process in how you invest. And that's what we teach here at Best of US Investors. In the meantime, happy election day from Mark and myself. Have
And
a great
Snarky
day. Live loud. See ya.
and cut.
But